Just remind us why private credit is really salivating at the opportunity here.
There's a huge opportunity within AI. Unlike private equity, which we're seeing, some kind of logjam with exits, there's big opportunity with infrastructure and digital infrastructure. The margins can be quite high. The coupons can be very lucrative. So yes, it's a piece of the pie that everyone's trying to get in on right now.
They get in on Meta, there's opportunities to come. I was just looking at a note put out by UBS, that they almost worry that perhaps this is getting too much. The froth starts to appear, the risks start to appear. Is that something you're hearing, Laura?
That's right. There are some concerns that, there's too much money chasing this opportunity now, and that it might be overblown. And demand, seems to be, apparently soaring, but I think, kind of a bit skeptical on that in the long term. But you're right, Morgan Stanley have said, for instance, that there's, trillions of capital expenditure needs for AI in the next few years, and that could translate to hundreds of billions of bond issuance coming into the bond market. So again, huge numbers here.
3 trillion in the next 3 years is the number that Morgan Stanley was estimating. It is eye-watering. A lot of it is US denominated. Just tell us where on the risk spectrum actually this lies. Is this what would be deemed investment-grade debt more broadly? Because these companies are, awash with cash and very bettable against, and many see the demand is there for these AI data centers.
It's a good question. The vast majority of what we're seeing could translate into investment-grade issuance, primarily because of the tenor. So the maturities of these debt instruments are very, very long. That allows companies and issuers to get an investment-grade rating, and also they're backed against hard assets. So you've got more collateral there. Should things go wrong, you've got more security to negotiate with.